Good morning, everybody. Hope everybody had a good weekend. I'm going to go over the calendar real quick. Decided I'm going to start this one earlier before we jump in. Let me just announce on the socials that we are just check here if everything is good before we continue. Okay, let me just announce that we are live and then we can kick this one off. All right, let's get the show on the road. So we have FOMC member Waller speaking at 9:15. I'm not expecting much to come off that. It's Monday morning. This is only a medium impact news event. Nothing for Tuesday. Probably going to be a lackluster or a slow Tuesday morning. Wednesday, 2 p.m. FOMC meeting minutes, PM session. So I expect a Tuesday with high resistance liquidity runs. Slow movement, nothing too exciting. Remember, AM session prior to the FOMC meeting minutes could be a high resistance liquidity run until after the 2 p.m. release, when price might clean it up. Thursday morning we have unemployment claims 8:30 and 9:45 PMI, flash manufacturing PMI. And then we have a 10 a.m. existing home sales number, which is not that big of a deal. Friday we have a Fed Chair Powell at 10 a.m., which again is not the most exciting. So really dependent on how Tuesday opens up and how we look around the market open or prior to market open. If we have clean structure in place, then that's going to determine whether it's going to be a possible trading day or whether it's going to be a day where you're just going to be better off sitting on the sidelines, tape reading it instead of actually taking any positions there. And then on Wednesday, again, same thing applies here. If we have a clean structure prior to market open and we have something that we can target, if price presents a clean base, then we can take possible trades off of those levels. All depends how we set up before we open up over there. Go back over to the US 100. Do a little analysis here. As usual, before I jump into the chart, I do want to take a look at the seasonal tendency once again to see where I am. Seasonal tendency. So about mid-month August, not much to see, guys. We have a 5-year rally down lower with a 15 and 24-year rally down lower, and your 24-year posting a rally down lower but not taking out the old low. And then after that, we have some sideways movement and rally up higher on the 5-year. Same thing on the 15. Really sideways on the 24-year. So it's going to be dependent on the price action, how we will look to trade the coming weeks. If we have clear directional bias, then that would set the stage for good trades. If we do not have a clear directional bias, then obviously that would set the stage for scalping and intrasession liquidity trading. Looking at the dollar index, we have a rally down lower in the 5, 15, and 35-year on the seasonal tendency for the mid-month of August. And after that, we have rallies up higher on the 5, 15, and we have a slight consolidation in the 35-year up higher. So again, we have dollar trading along with the indices. So that's something to be mindful of. Very choppy on the NASDAQ seasonal tendency for the 24-year. We have a nice sideways consolidation for the month of August. So far, we have been just glance at the chart over here, which you should be able to see that on your screen. We traded down lower. We have had this retracement up higher, taking out this old high that was formed on the 1st of August. Inside this fair value gap, we also have a gap over here. So far, we did have an initial rally down lower in the beginning of the month, which that did correspond with the seasonal tendency, with the 24-year of the NASDAQ correspondent with that. And we had this rally up higher after the first week here. So far, we did follow that seasonal tendency, although I would have liked to see more of a consolidation in here, following through with a move down lower. We might still get that consolidation move. Looking at the higher time frames, we have this order block over here. We have a fair value gap up here. Really messy candle down here. Not the best to use as a breaker block, but that would be a breaker block there since we did take out this liquidity above these levels. That would be a breaker block. Corresponds with this order block, and you have overlapping this fair value gap here as well on the weekly time frame. Looking at a monthly though, we trade below this low here. Really left this whole month in a wick. So we might be reaching for higher prices, and if it wants to do so, then we're going to be targeting this wick. So this monthly wick, consequent encroachment, is a level that I would have noted on the charts. Let's see where that lines up on a weekly chart. Trades up really high into this order block, way past the fair value gap. I would have that on the charts, but I'd be looking at this order block, break block, fair value gap here. See if we can trade into those levels on the weekly. See if it wants to send it down back lower. If not, and we trade through this, look at the mean threshold of this order block. And if that doesn't give us any downside, we're going to be focusing on this monthly week consequent encroachment. Of course, levels on a weekly here, so that's something to keep in mind. You're working with really high time frame levels here, so bring that top down analysis here and see what we have on a daily to work with. On a daily, we have a higher low and higher high. So we have this structure here in place for that breaker block. We got that structure here. So that's something we could refine. Pull that through. Fair value gap here. That's not a clean candle. And this candle over here, it does line up with that weekly order block, weekly breaker block. If we trade up into that, it could potentially be used as a break block as well. Although the only thing that I don't particularly like about this specific candle is the fact that I don't really have that short-term high structure. So I don't really like that. What I would personally do in this case here is I would just take these 3 consecutive down close candles, and that's going to be the breaker block. That's the simplest, easiest way to narrow that down. It's nice and clean. It stares you in the face. It's obvious. So I would use this candle here. Use that as the breaker block. You can use all 3 of them, and we look at the reaction that we have at this lower candle here. Marking this. I don't want to mark that out with a rectangle as that's going to clutter up the charts. Let's get some color going. Get a bit of distinction. For your own charts, I would just use a rectangle and just draw the rectangle from the high to the low of that those candles. That whole range. Extend that over. Find the mean threshold of that. That's going to be a level that you're going to be looking at as well for sensitivity. Just so happens to line up with that weekly order block. I should just note here weekly order block and weekly breaker block. So that could be a level that we see some sensitivity at. Must just be a coincidence that we that the mean threshold lines up exactly at that level, huh? Get some color going. I'm gonna make that green daily breaker block. So that monthly wick, that's gonna be a longer term possible draw on liquidity. But if we pay respect to this daily breaker block here, or if we pay any respect to the weekly order block and breaker, or this fair value gap, and we start trading lower, then obviously this is not something that I would be looking for. But if these levels do not get respected and we keep on trading higher, then this is something that I would be placing my focus on, as this is a level here that stares me in my face. So that's something I would look at. We never really paid any respect again to this daily gap. We just traded above it, came back into it there, and traded off higher. We then had this daily inversion. Traded up through that. Again, same thing. Came back into that consequent encroachment. Lit up higher through the order block. Traded up into this high here. So far we have been disrespecting bearish PD arrays here. So that's something to keep in mind here. So we are bullish at the moment. No signs of any reversals yet. We also disrespected this daily breaker block here. So far we're bullish. That's not something that I'm going to fight or try to trade against. Keeping in mind that it is a Monday, of course. So expect some slow price action. Other than that, medium impact FOMC member Waller, which honestly I think 9:15. I think they're just gonna take that and just throw that into the 9:30 opening. Just use that for market open volatility. So I don't expect too much of anything crazy with that. Mm, Tuesday has nothing on. Tuesday could be used as a could just used to get people trapped in, get everybody thrown off the board. Just chop, make it a Z day, an FOMC meeting minutes, make a big Judas swing, and then we've been rallying up higher here, and we'll look at these moves on a lower time frame, like the 4 hour and 1 hour, once we get down into them, and see who has been profiting here, and we can play devil's advocate for a moment and just see, who's who's got the money at the moment. So I'm not going to form any bias just yet, but so far bearish PD arrays have been disrespected on higher time frames. We have a high here. We had that high and this high. And if you get this away, you bring this up real close, you look at that high, and you look at that high, you can see this high really close to this one. Look up here, look up there. 19,577, 19,584. So we did trade above this high. And if you look at this high, 19,596, so we did trade above that high. So that's something to be mindful of here, keeping in mind that we are inside of this fair value gap here, which is a level that I'm only going to note the portion of this that is still open. Not going to note the rest of it. So I'm pulling that fair value gap. I'm going to pull it all the way from the gap. So I'm going to include the gap inside of my fair value gap. Pull it right to that high and pull that through. And that's going to be the daily. For now, that is just a fair value gap. And we will focus on that on a lower time frame. So we do have this high here and we have that high, which are relative equal highs, and we have a fair value gap. So relative equal highs could be price could be seeking to draw into these, but it's Monday. We have no news tomorrow. And Wednesday, we have FOMC meeting minutes PM session. It's a tricky environment to be in. We'll note these relative equal highs. And we will choose orange here. Relative equal highs. Not going to worry about that fair value gap now. We have a lot of stuff here that we can trade through before we get to these highs. Now, right off the bat, I talked about being stuck between two PD arrays just a while back. We have that daily breaker block. We have that sitting right there. We traded at that level. We have this daily fair value gap sitting above us. So right now we are stuck between two PD arrays on a higher time frame. And that's part of the reason why I say it's a tricky environment. You got to be careful. We could be chopping here. We're going to see high resistance liquidity runs. You got to be careful in here. More likely you're going to be looking at trading session liquidity, get in, get what you need, and get out of here. So there we can see those relative equal highs. Fair value gap, old high there. We do have some relative equal highs in here. So far, this is sitting inside of a consolidation. This down close candle here, order block, pull it through. We have this breaker block here. We have that daily fair value gap. Let me just adjust this to go to the bottom. And we have that weekly order block and breaker level that we are looking at as well. And then we have this daily relative equal highs. So far here, looking at this, we have had stops taken here. Stops taken out there. Rallying higher, not really taking any stops. Back into a fair value gap, rallying higher, rallying higher, rallying higher. Taking out relative equal highs above here. What does concern me here is the fact that we had this high and this high. We did clear that high. And we did take that high out there. So I would say the stops are cleared above here too. We traded back into the daily order block, breaker block, not order block. Daily order block, mean threshold, pull it through. 4-hour order block, mean threshold. Excuse me. Pull that through. And that is where we are sitting right now. We're sitting inside of a range, ladies and gentlemen. This low, that high. That's your range. Traded inside of 4-hour order block. We could be reaching up into this weekly order block and breaker as a draw, as well as those relative equal highs on the daily. But as for right now, we're sitting inside of a daily breaker block, and we have a daily fair value gap above us, stuck between two PD arrays. That is low probability. High resistance liquidity runs are expected here. We don't have we only have that 915 medium impact, which I think they're just going to take that, blow it with the 930 opening. So not much to jump in here and give us a lot of movement. Looking at the 1 hour, we see the same thing here. We had these lows taken out here, traded up higher. We did have a stop run there, taking out these guys, traded up higher, 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 higher. So what I can see here is a lot of buyers are in a profit. So going back to that FOMC meeting minutes, they could send this thing, they could keep this thing in a consolidation. Tomorrow morning, they could take this thing into this daily fair value gap, trade it up into the consequent encroachment, They could even go and tap the weekly order block and the breaker, which that's going to overlap with the 75% of that of this daily fair value gap. If I pull a fib on this, if I just pull a fib on that, that's going to be the upper quadrant. Okay, above 50%, it's going to be that upper quadrant. Coincidentally, they could tap into that and they can tank it, trade it back into we have fair value gap sitting here. Take it below the low, imbalance, imbalance, then rally higher. Or we could trade below this low into this fair value gap, but really wants to go lower into this fair value gap. Then reach for this relative equal high on a daily, which that's really simple. Once we trade it up higher into this daily fair value gap, if we trade above this consequent encroachment and we can stay above this level, you find a fair value gap, you find an inversion on a higher time frame, 15-minute, 1 hour. Use it as a filter. And if we trade above that, stay above it. That could be a base. Couple that with time of day, and you could form a nice little setup to get long, which would trade with that higher time frame narrative in mind. Keeping in mind that the seasonal tendency does still suggest a possible move lower or a sideways consolidation. So not much to see here. We are sitting inside of this low, that high. 50% was here. We are in the upper range of this price leg here. We didn't have a order block here. We traded into that order block. Would be noteworthy to take this order block here, like I said. Take note of that. For our order block mean threshold, we'll change that color in a second. It's a level that I would just have on the charts. It's going to overlap with this 15-minute order block. You have another order block sitting here as well. Trade it into that, bellied higher. We have this order block here, trade it into that, send it higher through the high, through that high, fair value gap. So nice little filter is use that gap here. 15-minute fair value gap. I ideally want to see this become an inversion if we want to trade off higher. So that is the simplest way to filter this. If you are not completely sure what you do, you get yourself a filter like a fair value gap. If you would be expecting higher prices, possibly since we are respecting these bullish PD arrays so far, plot a fair value gap or an inversion. If price stays above this level, we're going to go higher. If we go below this level, then we would be looking at these equal lows here. So at the moment, we have equal lows here, all low, relative equal lows here. And we did clear these relative equal highs here with this run up here. Remembering that this is a higher time frame daily fair value gap that we did trade in, and we had a nice reaction traded below this low here from this daily fair value gap. So this is a wonderful level to look at, see how price reacts around this level, and then from there on, sit on the sidelines until you get something that's clear, and you go off of that. Look at the dollar index. This should give us some more insight. So we have traded a old low here. Right off the bat, we have another relative equal low here, coupled with a fair value gap, which is something that we will note. Noting the remaining portion of the gap that is still left open. Look at a weekly. So far on a weekly, we are clearly bearish. We also have a weekly fair value gap here, sitting inside of that level. We did trade inside of that. So that is something to be mindful of. Low, high, lower, low, breaker block. We did trade through that already. We're lower than that now. So I'd be looking for this low here as a draw. Now, keeping in mind that the seasonal tendency suggested that the dollar index could be moving along with the indices, that is something to be very mindful of here as well. So it's a tricky environment here. I would be very cautious. For our relative equal lows, those are clear. Let's get rid of these. And just see here what we traded on a daily fair value gap. We traded into this daily order block here. That daily order block. Make it blue. My focus would be 100% on this daily old low and then this daily fair value gap. There's that daily order block here. You can see that lines up with a 4-hour order block, breaker block, gap. Extend that through. That'll be a new day opening gap, if I'm not wrong. New day opening gap, trade into that new day opening gap, and then tanked. But trade into that, you can look at this wick, pull the wick through, trade into a lower quadrant of that wick. I don't think we got the consequent encroachment. I should check for the sake of completeness. No, we missed that consequent encroachment. So you'll be looking at the lower quadrant. We do have this fair value gap here that we did trade. That's something else to take note of. We did trade the consequent encroachment of that. Below the low, below that low. So the only thing I see here is this 4-hour fair value gap here. Trade into this, send it off down lower. Same thing on the hourly chart as well. Fair value gap in here. We did trade into that, traded off lower. It just so happens to overlap with this 4 hour fair value gap. So that's a level that you could have noted on your charts. $15. We have another fair value gap up here. Nothing interesting. We are sitting inside of this sloppy price action here, sloppy upwards retracement. Traded down lower below this low again. Quite interesting. A level that I would note is this order block. These three consecutive up close candles with high, low, higher, high. I would just look at that. Look at that structure. Fair value gap. This would be an inversion here. I would look at these levels here for dollar as far as concerning dollar index. Make that orange. 15-minute order block. That's gonna look a little bit messy on the higher time frame. Just make it look a little bit better. Look to see if we trade above this or stay below that inversion again. It'll depend where we will see price trade into. Okay, let's quickly hop over to the US 500. See what we have over here on the higher time frame. I like this daily fair value gap here. How we trade into this daily fair value gap. I like that. Same thing with the US 100. I like the fact how we traded into that weekly order block here. I like the price action on US 500 more. Weekly order block. I'm going to leave that bold in red. Monthly. We have that same wick on monthly. That would be noted. Not going to note it over here. I like this order block. Look at this order block we have. Pretty much that is all that I would have noted here. Except for this breaker block here. If we trade through this daily fair value gap, that is something that I would note. Looking at the 4 hour, clearly trade into this 4 hour order block. Make it blue. 4 hour order block traded into that. A weekly order block, extend that through. Just look at these highs over here. So we did trade above this high. We have not yet traded above this high. And those highs. Only thing I would note here is this order block. We're trading inside of this low to that high. See here, we took out these lows, rallied off higher, rallied off higher. So there's a lot of sell side liquidity resting in the market right now. I do see a potential market maker sell model. That is something to be mindful of. We do have a gap over here, new week opening gap. We're right inside of that gap. We traded into this daily fair value gap. We hung around inside of it a little bit, traded into that wick consequent encroachment, traded out lower below this low here, back into this fair value gap. Really tricky price action. We're sitting in a consolidation here. Really sloppy trade higher, respecting bullish PD arrays. Order block, back into the order block, back into the order blocks. We did take these highs over here. Interesting. Use that new week opening gap as a filter. If we stay above that, that would be potential go higher. Keeping in mind that we have this scenario where we have all these buyers in a still profiting from this rally up higher. Something to keep in mind. I really want you to notice how this is a tricky environment to be in. That should be the takeaway home. This is a tricky environment to be in. It's a wonderful learning experience to tape read an environment like this and to have somebody put this type of an environment into your hands so that when you come into a chart, you know that, okay, this is likely to be a difficult scenario because we're stuck between two higher time frame PD arrays. We don't have any real high impact news events today or tomorrow, and we have that FOMC PM session move on Wednesday. Seasonal tendency, we have a likelihood of seeing a possible consolidation or a move down lower, which currently I'm not seeing that move down lower yet on a higher time frame. Looking at US 500, I see a better view of that possible move down lower because of the fact that we have this weekly order block over here. I like that weekly order block there. We're sitting inside of that thing. As soon as we get the reaction away from that level, see right there, weekly order block. If we get that reaction and we move below this low here, then that would definitely set the stage for possible lower prices. Keeping in mind that dollar index could be trading along with the indices. So we might see dollar. Dollar was very clear. So we might see dollar trade into its daily low as well as into that fair value gap before we could start to see some retracements in dollar, or we could still have a continuation down lower, and it's going to trade along with the indices as the seasonal tendency suggested. So that is just something you're going to have to be mindful of, and you're just going to have to keep in the back of your mind when you are inside of these markets, especially during conditions like these. It's not going to be solid, easy days all the time inside of the marketplace. Sometimes you're going to get crappy price action. You're going to get weeks where it's just going to be low probability, and you're just going to be better off sitting on your hands and tape reading this stuff and journaling and actually studying these conditions so that you just can learn how to avoid these conditions and come back when things are in check and it's like it's one-sided. It's gonna go higher. It's gonna go lower. Equal highs in place. Bam, we're gonna go to the equal high. It's when you come in and you have clear market conditions and you have a clear draw on liquidity, then it's solid. That's when you get into the trade and it's like bam, couple of minutes rallies right to your take profit and you're one and done and you're out of there. Instead of trying to sit here and battle, where's it gonna go? So it's really important that you understand how to identify these types of conditions here. Looking at the Dow Jones, order block, trade into that order block, trade it back into these candles here, trade it. Didn't quite tap the load, but we did trade back into that order block there. So on this one, we have clearly a respected bullish PD arrays here. Look at a monthly. See that? Oh, beautiful, beautiful order block. Look at that monthly candle. Just pulling back here, trading back higher. Gonna take a note of this monthly order block here. That was a salient. We traded into the mean threshold of that. Basically, we traded right into that there. So gonna take a note of this monthly order block. Let's note that mean threshold. Gonna eyeball that right there. We'll refine that on a weekly time frame. We can see if we can refine it. See, monthly mean threshold lines up with this weekly order block. Lines right up with level. So, and weekly order block. Yeah, weekly order block open. We try into that weekly order block mean threshold, but this is fine. This is close enough. We know we are reaching higher targets, relative equal highs, weekly relative equal highs. Pretty self-explanatory in this case. So on Dow, I'm clearly getting this higher draw on liquidity here. So it does seem like that daily relative equal high on the NAS is gonna be the draw on liquidity. And if that is the case, then we will be looking for higher prices. Not much on a daily. The only thing I would probably note is this high. That high right there. Daily, daily old high. That would probably be it. market maker buy model very clearly. Market maker buy model. This fair value gap here. Hmm. Sitting above the consequent encroachment. For our fair value gap. So we're sitting above this consequent encroachment. We do have these two consecutive down close candles, which would be an order block. You're going to pull that through. Take note of that. Make that blue. Let's leave it in blue. Get rid of that. We don't need that anymore on the charts. Monthly order block. Let's pull this back. Doesn't have to be so far out. So that's going to be where we will look at. Again, here. Let's just see if I'm done here. Yeah, this is all that I want to note here. Go down into a 1 hour chart. You can see that we did clear these lows here. Cleared those out there. We also cleared out these ones. From that point on, we've been rallying up higher. So we do have a market maker buy model here, which should be the draw on liquidity. As long as we stay above this fair value gap, consequent encroachment, as well as this order block on the 4 hour, we're going to target these highs. We have a 1 hour fair value gap here as well. See on the 15 what we have over here. We got this order block here, so that's noteworthy. 15-minute order block. And I'll make it a green. I like this high. I like this high over here on the 15 on US 30. Also like these relative equal highs now. Just looking at this daily again. We just have an old high here on US 500, coupled with order block, breaker block, really gap. It's not as clean as just equal highs there. Not as clean as I would like it to be. Let's get back over to the US 100. Just glance over everything here. I'm just looking at these lows again. Honestly, nothing interesting though. We got this old high as well. On ES, we had a. I'll just show you guys. Look at this high, look at that high. We have a lower high in place. And it was 30. See, we have a higher high. And if you look at the US 100, we have a higher high. So it's almost like that lower low would be an SMT where US 30 and the NAS just traded up there to grab the stops. And US 500 was just unwilling to go down there, to go up there. It was just too weak to get back up there again. Interesting. Not the best conditions here for sure. Most definitely not conditions where I would put down any money on. It just comes back down to like having a trading model, and just pushing the button is like 10% of the work, where you actually have to know when it's going to be higher probability to push that button in and actually make a profit. Whereas going in and pushing a button in market conditions that are low probability, and you just end up like giving back your profits. Whereas if you just sit on the sidelines and you know how to identify high resistance liquidity conditions and know when there is low probability market conditions where it's not ideal for you to push a button where you're likely to take a loss, and you just wait for that low resistance liquidity run, high probability market conditions to come back in, and you execute on that again, that's what makes you profitable. And people just don't want to hear that. People think that if you go in there every single day, you take a trade, the more you trade, the more money you're going to make, right? And it's just not the case. It's really the case of you got to filter your trades out and only take trades when market conditions are really ideal, when everything lines up in your favor, and your model is likely to play out. And then you push that button and you take those wins home. I mean, even if it's going to be like one trade once every week, and you wait for that high probability scenario to come into play, you take that trade and you bank X amount of handles, whether that be 5 or 10 or whatever it may be, and that is your cookie cutter, and you take that home. At the end of the month, if you had per se 3 profitable weeks out of the 4 weeks, that is profitable trading. As your account grows and with time, as you become more experienced, the mathematics can exponentially grow, and you can decide how much money your cookie cutter makes. You can do all the same things, taking that same one trade every single week, and that could be enough money for you to live comfortably with. And all the time that you have, you can spend that time with family, or you could do other things that you want to do, right? I mean, after all, we did pursue this career so that we can have more time with family, more time to pursue things that we enjoy. It's not about sitting in front of the charts all day either. That just ends up into you seeing setups that are just not there, and you just go into like a spin of craziness, and that's how you blow your account. High resistance liquidity run conditions. Now this move up here, trading into this 15-minute fair value gap, you go on a lower time frame here, you look at just this, then this could be a potential market maker sell model that could form, and that could come into play here. Look at how this daily breaker block fit into that really aggressively with this 4 hour order block main threshold. Fit into that aggressively. Inversion, pull that through, tapped into it again. Consequent encroachment of that. rallied off higher, traded off higher. It's really 50-50 this morning. Just nothing here that I would want to push a button off or get excited about. I personally want to see higher prices here. But at the same time, I need to give the market time that it can show its hand to me. It's no use. It's not going to help anybody to try and force the market. Can't force your will onto the marketplace. That's just gonna cause you to take losses. Just have to wait and see what they do, and when it becomes clear, that's when you can start engaging in it. It's really 50-50 today, though. Seasonal tendency, month of August, July and August, summer doldrums. Real difficult time to be to want to get involved if it's not clear. So this type of price action is just anticipated for this period of time in the year. Nothing exciting on a 1 minute either, though. I feel like the 5 minutes just cleaner here. Dollar index is so far trading higher, trading along with indices, and it's got that clear draw on liquidity with the daily alt low. So I do want to see dollar trade down lower. Hmm. Nothing yet. It's 9:19. So nothing interesting from that 9:15. Like I said, I didn't expect anything interesting to come from that. I mean, nothing really interesting here. They're just gonna take that, toss it into the 9:30 opening with that volatility. Use it at market open. Yeah, cycling through, getting a better view of this. We're just sitting inside of a consolidation. It's very clear on a higher time frame. We can see we're sitting inside of consolidations. Low probability market condition, especially because of the fact that we're sitting in between a daily break block and a daily fair value gap, sitting in between two higher time frame PD arrays. Trust me, make a note in your journal that sitting between two higher time frame PD arrays is a low probability market condition. You gotta sit and wait for these guys to show you their hand before you would be able to take anything here. Because at this moment, I can see prices going down lower and I can see prices trading up higher at the same time. So when I can frame both sides of the marketplace, it's number one for low probability. And that's exactly what Michael says. If he can frame both sides of the marketplace, then it's low probability, just not high probability. I'm gonna look at the calendar here 1 second too. I'll just bring it over. You guys can watch along. So we got that FOMC In my personal opinion, I think we're gonna clean up right here on Thursday. We're probably it's either gonna be a pre-market open like 8:30. If it's gonna be clean, we're gonna get something at 8:30, or we're probably gonna get something at 9:50. So FOMC meeting minutes is probably gonna put that Judas swing in for the week, and then this is gonna be continuation. Send it to we'll see where once the market shows its hand. Friday, 10 a.m. Fed Chair Powell. Fed Chair, something to look at 950 again. Could be like a last push down lower, and then at the same time that could be the Judas down, and then it could just trade up back into the range for the week. We'll just have to see what next week looks like. Monday, Tuesday, 10 a.m. Nothing major. Nothing on Wednesday. Monday, 8:30, core durable goods. Thursday, prelim GDP, 8:30. Friday, core PCE. Interesting week. Not too much going on here though. We got that Tuesday, 10 a.m., which is that's not a major driver. 8:30 prelim GDP, that might inject a little bit of volatility. And then Friday, 8:30, we'll see. Doesn't look like there's going to be a lot going on next week. And that's basically it for the month of August. We should see if we trade in line with that seasonal tendency, we could see prices push back up higher again. Or we could sit sideways. Remember that long term that indicate sitting sideways. Just a lot going on this week. It'll clean up after this FOMC meeting minutes. Should start to clean it up a little bit. So we did push down through lower here. 925. That'll be inside the macro. Do, do, do. That'll be the breaker block. We might have already traded back into it there. Did it gap down a little bit too? Really interesting. So that might be a potential for a short. We could tape read that. See what happens. Let's tape read that. Let's go for the usual 5 handles on stream. It'll be their lowest down candle. That would be the breaker block. I don't think I want to use that candle. I think I would opt to use this one instead. Even though that one is lower. This one is part of this leg. So we have that breaker block inversion coupled with this inversion. That stop would be up there. Low probability conditions, probably something that you would take with a lower risk. You would be looking to target these equal lows down here. So just taking note of this. Your eye is drawn into that. That's not going to be 5 handles. It's going to be about 3 handles. But that is a level that you could partial. And again, 3 handles is 3 handles, folks. So if we trade 3 handles, that is where I would put the stop into even. Leave a runner on if you can. So it's all about trade management right now. It's all about managing that position. You do have a low down here as well. Beverly gap, inversion. All of those could be used as targets. So there's that low. So that's where I would pull that stop and cover the commissions and fees. If it takes you out, then it takes you out. Then you've already taken a partial on it. You've already taken something home. If you're only able to trade micros or minis, then that's where you just close that position and you whatever you made, you take home. And that comes back to what I mentioned this morning, where with these conditions, it's just not high probability market conditions. It's a Monday with all the odds that are lined up today. It's just not high probability. So whatever you make, you take that home. So for a second target, I would just look at this. Look at that inversion. We trade below that inversion, we could go for low. I'm looking for low hanging fruit, as ICT would say. So that's going to be the higher PD array of the bunch. So that'll be the inversion. I'll look at the open. If the open gets tagged, then that is a one and done, 5 handles. That's where you close the position. So 929, market's almost going to open up. Stop is already here inside of a profit. So we grab the liquidity. Waverly gap here. We've got order block up here. All levels that you would be looking at. I think it's going to trade into this order block. Order block, we have a Waverly gap. We have a gap. I like this rejection. Okay, that's beautiful. Traded below the low once more. We have this short-term low as well over there. You could note that. That is something else that you could look for to trade into. That would also be if you take this range and that range, that would be 50%. So that could be another potential partial. So that would be take profit hit. That'll be it. One and done. Right there, you close it. You take home what you take home for the day. And you get out of it. Just want to look at the dollar. Dollar index is not doing anything exciting. It's just trading. Let me see here. 825. It's been trading up slightly higher with a consolidation. Nothing interesting. US 30 is going up higher. US 500 is trading up higher as well now. So indices are out of sync. Look to see if we can get below this low now. If it does want to go below that. Look at how we traded into this wick of that candle. Trade into that wick. So this wick is another potential. Now, if you're still in this, then the way you would manage this is look at this wick. You got that wick. Fair value gap here. fair value gap there. So that's about 3 PDA ratio. You would have a stop here above consequent encroachment of this wick or above this fair value gap here. Price action is not ideal here, especially with US 500 and US 30 trading against the against NAS. I'm really trading up higher here. So indices are out of sync. So that's low probability. So trade at consequent encroachment. Nice reaction, but I don't like how we traded through that, trading up higher again. That is not something that you would want to see. Ideally, tap into it. You want to see it go below that low. So that's not good. Not the reaction that I would want to see. Nice reaction there. We did, however, on US 500 and US 30 trade above the highs. We closed above the range. Let me show you. Trade above here, above these equal highs. So indices are out of sync. So that's low probability. So again, that's why I said if you're in that position, in that trade, that's why I really brought that stop down. The moment we got below those lows, 3 handles, that's a partial. And you bring that stop in. You bring that stop down. Pay yourself something. And then you would be looking to target. You could target that low. And then this inversion is a beautiful target for a low hanging fruits. And then if we can get down into that low, which as you can see, we didn't trade into that low yet. Could also have used this fair value gap here, but that inversion just stood out to me. You also have a low high, lower low. So you have a breaker block sitting here as well. That's another level that you could look to use. It just depends on, again, what resonates with you, and that's what you're going to use. Order block. So far, I did say that I like that rejection there. We did close way lower here, below that wick consequent encroachment. Beautiful. That's what you want to see. Order block. Trade into the order block. Rejected that. Want to see a close below that inversion now. And then rally to this low here. We are trading out of sync. Low probability. So that is your number one sign as well. If you're trading out of sync, be careful. If you are in a position, then you would look to secure a partial and get that stop to cover fees and commissions. Now you could take a partial at the high, you could take a partial at the mean, the consequent encroachment. You could take a partial at the low. Low hanging fruit, take a partial at the high. Okay, that's low hanging fruit. And then you could look to see if it wants to get to consequent encroachment. Look to see if it wants to get to the low. So there's that low. Beautiful market maker sell model playing out. Look to see if it wants to go trade below this low. We can look at some higher time frames. Beautiful. Taking out people that are long. Nice fair value gap here. A couple of that low here on the 5-minute. Just use that, and that's gonna be this low on the 1-minute. Look to see if we can trade into that. See how fast we're moving now. Low resistance liquidity run. There's that low. Create the low of that 5-minute fair value gap. Get that on the charts. 5-minute fair value gap. You'd then be looking at this low here as a next target. At this low here. 5-minute low. So that now will be a inversion. Inversion. See these relative equal lows here. 5-minute low. Take a partial below these on the 1 minute. Or you could wait for it to snag this low down here. Get rid of these. Notice how we trade through that daily breaker block here. We are now below that daily breaker block. So keep that in mind. So that all would come into play with we trade into that daily fair value gap. So that is something that you want to keep in mind. Again, like I said, if we see that turning point market turning over here, then that could set the stage for lower prices. And then we probably might not see that daily equal highs on the NAS. So fair value gap here. Look at that fair value gap. We have this order block. It's getting rid of some stuff. So by now the trade is already over. But that would have been a nice 0.31% or 60. Really nice run. We're just consolidating on US 500. Consolidating. Not going anywhere. Dollar is slightly trading up higher, which that's adding fuel to the fire for NAS, sending it down lower. Not a good reaction. We respected this 5-minute consequent encroachment. Sending it up higher through this fair value gap, sitting inside of the order block. So look at how price trades. That is a beautiful reaction. That's what you want to see. Look at this inversion. Want to see it stay below that, ideally. If we invalidate the inversion, then that will be fair value gap or block inversion. So that's the kill switch. So that right there is a kill switch. If that candle closes above that, that will be it. Look at how the candle trades. That's the important thing here. Look at how these candles are trading. I'm not seeing the reaction that I want to see here. I want to see it close below that inversion consequent encroachment. So it closed right on that consequent encroachment. So this is not what I want to see here. This would be kill switch done with it. 3 PD arrays would be taken out here. So it's gonna go back into the range here. Quite interesting stream this morning. Really good price action to tape read, and very good price action to learn inside. We sat inside this 15-minute fair value gap below the consequent encroachment breaker block, traded into that breaker block. That is where I said, okay, we could possibly see a short to go into these equal lows. And then these lows, and we were looking at this fair value, this inversion here as a low hanging fruit target. And that's it. That's the trade done. It's all about there's so many things involved with trading, so many things leading up to taking that execution, taking the trade, knowing when it's not going to be very high probability, knowing when it's not going to be the best trading conditions, knowing how to identify that and be comfortable with saying, okay, we're going to have low probability trading conditions. So I'm going to invest my time into something else, spending it with family or studying. And when you come back and you open up the chart and you just glance over it and you see there was indeed nothing that would have been worth your time, anyways, to sit down that particular day. And that is one of the best feelings. If you know that you were going to have low probability conditions and you go do something else and you go back and you're glad that you did not experience or sit through any of that high resistance liquidity run conditions. Your experience has spared you from sitting through those environments, and you just don't appreciate that until you have sat through those environments, taken trades, you've gotten yourself chopped up, you felt that pain. You just don't appreciate having that experience of being able to know that it's not just not going to be worth your time sitting there and trading. Just come back another day. You just don't appreciate it unless you've gone through that process. So, with that all said, I'm handing you, I'm giving you a toolbox, and I'm showing you how the tools look and how the tools feel. And I'm showing you how they should work in different types of environments. Looking at this live price action, looking how we react at certain levels, at certain times of the day. Even in low probability conditions, these things still work. And this is how you build your toolbox, if you want to call it that. You build up a good set of tools to work with. I'm handing you real jade, as ICT would say. I'm giving you the jade And then the Jade Master is taking the Jade back. So that in the end of the day, when you sit down, you're going to be able to identify real Jade from fake Jade because they feel different. They feel different. There are different things involved in those market conditions. Price action trades differently. That is something you'll pick up when you do enough tape reading on different market conditions. Then you will see that certain conditions trade different than other conditions. High resistance liquidity runs are back and forth, back and forth. A lot of give and take, a lot of give and take. Note down the emotions you feel during those high resistance liquidity run conditions. If you would be tape reading that, how would you feel being in that trade? How would you feel when it trades into that PD array and it gives and takes, gives and take? How would you feel? And how would you feel in something like this, where we took that breaker block entry and it was gone? Okay, traded right down lower. Didn't have too much time to think about it. Went right to the first partial. Holds of equal lows. Went right to that. Traded right into this inversion. 5 handles right at this inversion. Didn't give you a lot of time to think about it. Went there straight shot. Not a lot of back and forth, back and forth. Note down how you felt during that. It's part of the learning process, learning curve. So for this one, hopefully you have found this one insightful. I hope that you have learned something today. And until the next one, good luck and be safe.